Do you see further sell-offs, or at some point does this look like a healthy correction that was needed and that people can start investing in again?
Well, I tell you, Taylor, really, if you think about it, the S&P was up over 60%, still up over 55% from the March 23rd intraday low. So we've only had 3 or 4 or 5% pullbacks. I think we had one that briefly touched 8% for a day. So we have not had much give back in this gigantic run that we've had. So inevitably, this was this was bound to happen. And when you think about what's going on, I think it's very simple concepts here. We've had the big run up. We have a big employment number out tomorrow because let's face it, consumer spending runs the economy. If consumers don't have jobs, they can't be out spending money. And then, of course, we have the long weekend, which, as we all know, anything can happen over these long weekends. So I think it's just these basic concepts largely hinging on that we haven't had much of a pullback at all, but certainly pullbacks are opportunities in our minds.
Yeah, and I mean, we should put it into context. I mean, we did erase our gains for the year on the major indices, but you talk about an S&P 500, Scott, that was down at one point something like 31% on the year to date. And then, of course, it rallied, 50 plus something percent off of that low. So there are a lot of opportunities for investors to adjust either up or down here, and there may be another opportunity after today. I am curious, though, as to whether some of those opportunities are going to be based a little bit more hard on the fundamentals, both in terms of corporate fundamentals and economic fundamentals.
I don't think we're going to dwell, Romaine, I don't think we're going to dwell overly on these fundamentals. This is going to be a macro outlook. Are we going to see a vaccine or a couple of vaccines approved at the end of October? The market has thought that October, November was the time frame on that. Are we going to see some improvement in unemployment? We're certainly expecting unemployment to be below 10% by the end of the year. Those are the kind of things, and I think when we hear earnings, individual companies, sure, they're going to have a bad day, a good day based on whether they missed or beat or things like that. But for the overall market, I think we would argue right now company fundamentals are less important than the macro environment improving as we go ahead. That will allow these companies to improve their earnings, improve their revenues, those types of things. That's what's going to be driving the market over the next 6 months, 12 months.